YouTube, this is Jerry D in Tennessee, talking about some stocks today.
So I'm kind of pumped because this is we're coming off for a good start. You know, my last video I was talking about dividend stocks. Okay, investing 20,000, yeah, 20,000 into some stocks. Let's get into it. So right here's my portfolio. This is what's going to be paying out. You have the payable date, December 12th and December 15th are the two dates that we have listed right now for the next month. One stock, AGNC, is going to be paying me, this is $10,000 I've invested in AGNC. It's going to pay me $74.40 next month. CRT is going to pay me $97.54, just a little bit more money. And it's kind of interesting because this stock's went down and it's paying me more money, but it's paying a higher rate, which, again, I said if they pay a higher rate, they're going to be it's more of a risk if they're paying a higher rate. So anyway, if I scroll on down, this is for a year that it's listing. And for the year, $20,000 is going to pay me $2,063.28. 10%, over 10% of what I've invested is going to be paid back to me. A bank is not going to give you this kind of interest. So there you go. These are the payments. This is scheduled payments for the next 12 months up until September of next year. It'll tell you, most of the brokerages will give you what your payments are estimated to be for your dividend payments for next year, because on a yearly basis, these companies will review their dividend payments and they may adjust according to their profits for the current year, what they're going to pay out the next year. So this can change over time, okay? So here's the thing. I'm already up, just after a few days buying into this, I'm already up over 10% on what the dividends are going to pay me. That's more interest than what a bank's going to pay you. So let's look at AGNC. It actually went down after I bought into it. It's dropped, but you go and you look over like 5 days, it's up over 5 days time. The past month, it's down a little bit, but if you go 3 months, it's coming down. Year to date, it hit a spike about the middle of the year, and then it started coming down. So I'm expecting it's going to be on the rise up again. We shall see what it'll do over the year. You see it has a pattern. It comes down. It went up. What's 5 years look like? Okay, it come down drastically back in 2020. So it's slowly on the rise up. So as that goes up, my dividend disbursement is going to be more if the price keeps coming up over time. Right now, they're just paying out 8.88%. But the reason that I'm getting over 10%, okay, it's because the value of my stock has went up from the time that I went in. I'm still up a cent a share. So, and Cross Timbers Rarity, they've come down one day. But see, they've been up too over 5 days. So I'm still good. I think I'm still good. 7.26. They're both up more than what I paid into them. I'm still just a little bit up above So this one's down 37 cents on the day. So that's not bad, over 10% of the money. If you go back again, $2,000 off of $20,000. Actually, it's less than $20,000, but because I dropped the price to account for, I've dropped the number of shares to allow for the trade, the cost of my trade. And I think since these both are NASDAQ stocks, they probably didn't charge me. So I'm like a stock, maybe a share or two shy of what I could have bought in for the full 20,000. So probably 1,900, 900 and something is what I've got into this now. 19,900 and something dollars is what I've got into this. So, but over the time, so like I was saying in my previous video, if I do turn on a dividend reinvestment program, if I do the drip, and every time I get a check each month, so for AGNC, every time I get $74.40, that could go back in to buy more shares of the stock. Right now I've got 620 shares. So $74.40 each month. If that went in and bought more shares each month, my dividend payout is going to grow because I'm gaining in shares. And if the price of the stock goes up, the dividend payout is going to go up. The same thing with CRT, 16 cents a share, $97. Every time that $97 check hits, it's going to roll into more shares of this stock, and it's going to be more shares, more dividends, and it grows over time. It's called dividend appreciation. So, you know, over a course of a year, over with dividend appreciation, I could be gaining 18% on what or more of what I've invested on my money. It's just going to continue to grow and grow and grow. If I leave it in there for 10 years, it's going to grow even more. The 20,000 may double and maybe 100% that I've gained on my money at that point. So used to savings accounts would pay you that kind of money, that kind of return. Used to, you could get that kind of stuff out of a savings account, but you can't anymore. It doesn't work that way anymore. Let's go here. Let's look at Capstar. Well, it looks like the local banks got bought out by Capstar. Banks are kind of funny. Here in my area, I don't know about your area, but here lately, it looks like, well, you can't even see. It looks like Capstar has purchased Athens Federal. I was going to check, see if they still post personal checking, savings. See what savings is paying out through. They tell. Excuse me. Checking, private, senior. They're not going to tell you, are they? Who are our story? It's like they're merging with the Bank of Waynesboro. So they're not even telling what their interest is. Certificate of up to 5 years pays a fixed rate of interest over the term. They want you to talk to them about what their interest rates are. They're even putting them on there. And the stocks are telling what they're paying out on dividends. So oh my word. Wealth management. Do you not tell me of anything about what your percentage you're paying? Mortgage investors. I guess they're not even saying what they're paying out. Used to on the main banks. Let's see. Capstar. UT Federal Credit. Let's see what this bank's doing right here. UTFC. All right, here you go. Here you go. 2%. That's not too bad. It's come up. Annual premium youth account. A youth account is going to pay 1%. If you're in a Christmas club or vacation club, something like that, they're going to pay you 0.5%. Yeah, 0.5%. So rewards checking, if you're in rewards checking, there's probably a minimum balance. They're going to pay you 2%. I'm getting right now 10% on my money. Looks like they got good rates on auto loans, and then the annual percentage is low as on the signature loan is about 10%. So about 10% on what a signature loan is going to be. That's what I'm getting. What you're going to pay on a signature loan, on a personal loan, is what I'm getting on dividends off my money. So, and I'm not knocking banks. They're just not right now. The interest rates back. Before 2008, they were paying 5%. I believe was some of them higher than 5%, depending on like if you were doing CDs. Yeah, you might have got maybe 7 or 8% on your money on a certificate of deposit, but you had to promise that you were going to keep it in that certificate for maybe 3 years or something, like 36 months or something like that. The higher, if to get the higher interest rate on the accounts, you had to leave it in longer. You had to promise that you would keep it in longer. So they have different rates on certificate of deposits, but you don't get nothing like that now. I guess this holiday savings club's giving you half 0.5% here, and a youth account. So you open an account for your kids, and it's sitting there 1%. You can make more money for your kid by taking and opening up an account, and buying into a moderate paying stock, paying out dividends over time. And look at do your research before you do it. Do your research with the company, because the other one, the CRT, was a strong buy. But anyway, let me stay focused. You can get more than 1% on your money, is my whole point. Even if you got into another stock, see, like this one's come down 5 years. What does it look like at 5 years? So they come down. So they're in the dip, and they're slowly coming back up. So if they can get back up here to $16, $17 a share, I'm going to be good if they can get back in like 2018. So if they're on the move up, if they're going the way up, my money's going to grow that way too. So, and this is a good picture. When in doubt, zoom out, okay? So look at this. They come down in the dip, and now they're slowly on the way up. So if you're wondering what the stock price is going to do, zoom out a longer period of time and see what a longer period of time is going to give you for the stock. If I go to the bigger chart, can I go out further than 5 years? It's a good question. Yes, I can. Okay. So 10 years, they're down, but they're on the slow climb up. And technical indicators, upper indicators, moving average. So the moving average, large chart. So this moving average is on the trend up. You see this curve up. And if we go lower comparisons, no, I want technical indicators, lower indicators. I always look at MACD and RSI. And see the MACD is on the trend up right here on the bottom. Oh, you can't see. Let's get over here so you can see. All right, so right here, the MACD is on the way up. It's on the slope, on the climb up, a slow, steady climb up. The weighted average is on a steady climb up, along with the price. So usually these things, when they meet, like a weighted average, when it meets the price, it'll cross down and start coming down. But this doesn't seem to be the case. This seems to be pretty steady flow going back up. So over time, I'm hoping this stock will grow, and with dividend reinvestment program, I can really grow my money. So let's it opened up a new window. I'm not used to that doing that. I guess Yahoo doesn't. Yahoo keeps it in the same, so I can close. Okay, so close window is there. All right, so AGNC. So if I go to the big chart here, large chart, blow this up, and 10 years time. So they're on the way up, slight down, pull back. I think they're going to climb up. You know, if you look at what the pros are saying about the stock, go back to the snapshot. Tip Ranks is saying it's a strong buy, positive. Now, Argus Fundamentals is strong. Smart Consensus is saying it's just a hold. But everybody's positive. Most of these guys are positive about the stock, so that's a good sign that to be in the stock. These guys, I mean, they're trying to be honest, and they're looking at this stock for a future, for long-term holdings. This one, Refinitiv is a positive, and it's a strong hold on Smart Consensus. Tip Ranks has, and these others haven't ranked it, but so everything's positive on this. So let's change gears, and PSEC was the other one that I had mentioned, but here's the reason I did not buy into PSEC. I'm going to keep my eye on it. Prospect Capital. I was going to split my money up in thirds and go in all three. But when you go in and you look at this analyst research, Refinitiv was positive. Smart Consensus is a hold. But Tip Ranks is saying it's a moderate sell. So I'm going to hold off. I'm going to see what the stock does. Let's go to this chart. Let's go to the bigger chart. Let's go to 10 years, large chart. So they are down, but they've been up. I should have, if I was going to buy in here, I should have been buying right in here as it was on the climb up. That would be a really good. But it's up and it's pulled back a little bit, so this stock may be all right. It may get back up into the higher highs, and if it looks like it's going to continue to move up, I will probably move a little more money into that stock as well and hold it as well. So we shall see. I'm going to keep an eye on it because, like I said, I was a little cautious about it, just because when you look down here, you got this little bit of negativity here on Tip Ranks. So again, I've seen, this stock, it was the cheapest as well. And when I told you I was in this stock named PER in a previous video. and the stock got down to below $1 a share. It got pulled off the NASDAQ. The ticker disappeared completely. I got out of it before the ticker disappeared, but it kept going down and down and down and down. It was more like around $4 or $5, and it was dropping down to $3. And then it's like I'm thinking I better get out of this stock. I'm going to lose my tail if it gets down below $1, and they delist this stock. And that's what happened. They delisted the stock. The stock's gone. PER is gone. I mean, you can go and find a PER over in France at that alcoholic company that I showed you, but it's not the same company I was in. It was Standridge, Period Standridge, I think's what it was called. But Standridge, Period. But yeah, PER is no longer in the stock market. So keep an eye. So I'm saying just keep an eye on your stocks. Over time, these other stocks that I'm in, these two stocks right here over time is positive. This is a positive thing. Like I said, over a year, let my money sit in there and I'm gaining $2,000. A normal, like I said, a normal checking account, $20,000 is probably going to give you, they may give you $20 over a year. Well, let's see. Calculator. So if we say 20,000 times, what was it? What were they paying? All right, see, if they pay you 2%, okay, let's do this. Let's 1.02%. No, I was wrong. So they might give you $400 over the time. The savings account that we were looking at, the UT Federal Credit Union, would give you $400 interest over the year for your $20,000 sitting there. Whereas my dividend stock, which is my whole point in doing this video, my dividend stock will give me $2,000, $2,000 plus dollars. So, and you can, like I said, you can go out and run a report on your brokerage for dividend stocks. Find a moderate. If you can get 7 or 8%, that's probably the target. If you go any higher than that, you're really taking a chance of the stock tanking because it's a higher risk stock. They're paying more because they want you to invest into it. And if the price of the stock drops, you're going to lose your money, and it just can turn out bad. 7 to 8%, and you're probably good. You're probably good to get into the stock. So, and I talked about doing I think I showed that on the previous video on how to do that. So, anyway, again, I am not a financial advisor. I'm not a stock advisor. I'm just an old man, a lonely old man in East Tennessee talking about stocks, talking about investing his money in stocks. And again, I advise you, if you're going to trade stocks, do your own research. Don't go off of what I say. Don't chase somebody else's trades. Go and do your own research and get to where you're comfortable yourself. You know in your mind that you feel comfortable for this stock. Just off the research, off of the news is coming out, what the price action is doing. Look at what the price action's doing. Like I said, when in doubt, zoom out. Let's go back to the big chart again. And let's go out. 3 months, 6 months, 9 months. Let me let you see what I'm looking at. So it's been lower than what it is, and this is looking like it's wanting to trend up. If you go back into the day, it's been high. So this is the potential of this stock. $18, it can go on up another $2, and it'll be where it was June of last year. No, June of this year was when it's in the high. So right now it's pulled back, and everybody's giving positive news about this stock. 3 years. See how it dipped right here? It come up, it's come down, it's going back up. I think it's going to go back because 2020, the pandemic, has hurt this stock. I think now that the dust is settling, we got the vaccine out, the government's talking about stimulus. I believe this is a long hold, and also the professionals that look at these stocks, the brokerage, will also tell you what they think about the stock. And I would trust them because they know a lot more than I do about the stocks. So, yeah, over time you see how it's dipped and it's on its way up and it's pulled back a little bit. I think it's going to move on up. I could be wrong. It could dip like this again. If we have another shutdown, I expect this will dip again. Everything will go down. But we shall see. Time will tell. And as I've said it once, I'll say it again. Stocks are a risk. You can lose money. You can make money if you're in the right stock at the right time. The trick is looking at the price action of the stocks, looking at the news, looking at what the company's doing, and getting in at the right time. That's how the pros do it. They look at the stocks, look at the news, watch the stocks, what the stock's doing, and you just got to get in the stock at the right time. They just go up and down. That's what they do. And if you watch it and you worry about it on a daily basis, you're going to give yourself ulcers. But do keep an eye on it. Keep an eye on the thing. You got to take the emotion out of the whole thing and be realistic. Look at what's really going on with the stock. Look at the indicators, MACD, RSI, volume weighted average, the price of the stock. Look at L2. Look at the time in sales, and that'll tell you what the stock is doing. And then base what you're going to do off your decision from what's going on with the stock. Look at the stock. Look at what the stock is really doing. So, anyway, I appreciate you checking out my video. Just wanted to bring that to your attention. Like I said, I wasn't just blowing smoke about the money. I was seriously looking at investing the money. I just showed you what I bought into it. You can see that I'm predicted by the brokerage to make $2,000 off my investment, letting my money sit in that stock. It's like, think of it this way, okay? Some people get into rental properties and you collect rent every month. This is like you're renting your money out. You're letting the company hold your money. It's sitting in this stock, and they're paying you rent for your money is what the dividend is. They're paying you a rent fee for your money over the course of a year. So, and then again, that's a moving target. That's going to change with the price. That's going to change with when they go and review their financials for the year. When they do their fiscal end of year, they'll look at what their profits and losses are, and if their profits are good, then they're going to up the dividend. They could potentially up the dividend. They may not up it. They may keep it where it's at, but they could potentially up the dividend. If the profits are down for the year, they might drop what they're paying on the dividend. You got to keep that in mind too. So that's why the dividend reinvestment program is a good thing, because you keep growing how many shares of stock you have of the stock. And those increased numbers of shares is going to increase what gets paid out, because you get paid out per share that you own of the stock. So as you grow how many shares you have in your portfolio, the dividend payout's going to be more over time. And that's how you grow your money. That's a lot quicker than what a savings account's going to grow your money. So anyway, that's just as simple as I can make it. I'm just trying to teach people that this is, again, I'm not a financial advisor. I'm not a stock advisor. And I'm making these videos just to teach people on what's going on in the stock market, the mechanics behind it, and what you can do with it. You need to make your own decisions on what you're buying into. There's reports. Learn to use the tools the brokerages give you. The stock screeners. Look at, if you're going to get in the dividend stocks, look at the dividend stocks. If you're going to play around with what Tim Sykes does, flipping OTC stocks, then learn to use the screener, the stock screener, to find the stock spikes as they're going up. But again, if you're flipping stocks like Tim Sykes, and he will tell you he lost $500,000 in one trade. In one trade. So be careful, okay? You can make money the way Tim Sykes does it. You can make money Tim Sykes the way, if you go into stocks to trade, and I'm not getting paid. I'm not getting paid to plug them. I just know they're out there, and these boys know what they're talking about. They will tell you the real deal on what the stock's doing. They will Tim Bohan on Stocks to Trade will tell you that you can lose money too. So Tim Sykes and Tim, both Tims, will both tell you can lose money in the stock market. You've got to look at what the stock is doing. Pay attention to the stock. That's the whole key. Once you learn to pay attention to the stock, look at the tools that the brokerage gives you, the indicators on how to read the stock charts, then you can make money. You can just go with the wave. Just ride the wave. When it goes down, buy in. When it goes up, sell. That's how they make the money. That's what Tim Sykes does. The stock goes down, he's watching, and he gets an alert on the screener, and it says this is up 10%. So he gets in there and he's watching the chart, he's watching L2, time and sales. If he's got more, if the price is climbing more than it's dropping, because it's going to fluctuate up and down. If it's climbing, he'll jump in for 10, 15 minutes, and then he'll jump out, make a quick $500,000, $1,000 off his money. Sometimes he's making $2,000 or $3,000 on his money, depending on how much the stock moves. And you can do that. You can do that. I've done it watching his videos. I've done it getting into his chat, watching what his followers in the chat room or the stocks. They'll talk about what stocks are moving. You look at the right stock and the stock's moving at the right time, you can make money, but you can lose money as fast as you can make it. It could drop. Just like, let's look back at this chart. Let me show you here. You see this drop right here? That's how they'll drop. When they drop, that's how, bam, like a brick wall. Like a rock. That price will drop. This one dropped from $19 down to $9. Almost half. So if you were up here, if you bought in right here at this peak right here in a stock, say this is the OTC stock, and you buy into this stock right here at this point, and then it drops, this price drops so fast, people are trying to sell at this point. You see how this volumes went up? People were trying to sell at this point to get out of this stock right here. What probably happened on this stock is the price got up to $19 and people had been in this stock. They had probably bought this dip right here, $14. He got up to $19. They made what is it, 14? They made $5 per share, and then they're selling to make their $5 per shares right here. And what it is, when they're selling, they're taking the bid. This is what happens if you take the bid to sell. You drop the stock price. The investors that are taking the bid is causing this price to drop. This is another teachable moment. This is a bunch of people taking the bid and not taking the ask. If people had held out and hadn't took the bid and held, if they had held at $19, if they had set it for $19.50 and held their price and hadn't dropped their price to get out of the stock at this point, and people were trying to buy to get in, the stock price would have went on up. You would have drove the price on up. But instead, a lot of people were taking the ask and they dropped the price. And that's typically the people that follow Tim Sykes. When they're buying and selling the stocks, the stock spikes, that's how you can lose money. And they are the ones that's causing this drop in price because they are taking the ask to get out of the price, out of the stock. If you'd hold your they were taking the bids. Excuse me, they're taking the bid. If they held their ask above 19, if they got up there and held like 1950 right here at this point, and did not drop the price that we're trying to sell and people were buying their shares, then the price would have went up to $20, $21, $22. But they didn't. They took the bid and dropped the price of the stock. They lowered the price of the stock. Each sale of the off, everybody sells a little lower, little lower, little lower, little lower, little lower, till it's down to 973. So Anyway, so that being said, it is a risk, but you can take the risk out of it by paying attention to what's going on. That's what it really takes to keep your losses, cut your losses, pay attention to what the price is doing, and you should be fine. But anyway, I'm rambling on too much. I'll let you go, but I wanted to talk about these two stocks. So show you that, yes, I was making 10%, even though 7 or 8% are what they're saying they're going to pay out. I'm getting more than that because the price has changed since I bought into the stock. So that's how the mechanics work. I hope I made sense, and hopefully I'll see you in another video. But anyway, if you're not subscribed, I'd love for you to subscribe. I'd love if you hit the like button. This will push this out to more people. More people can learn from these videos. And if you hit the notification bell, you'll be notified when I come out with more videos. But anyway, I hope you have a good night. Hope it's a profitable week for you. And again, please, I hope you have a good weekend. But please be careful with your trades. Pay attention, and I think you'll do fine. And I hope to see you in the next video. Thank you. Bye. Hey, thanks for coming by. Glad you checked out the video. Hope you liked it. If you like it, please click on the like button. And if you're not subscribed to the channel, would like to invite you to subscribe to my channel. May God bless you, and I hope you have a good day. Bye. Bella's got to be right up under me, don't you, Bella? Oh my word. Cloudy day, looks like it may rain. Clouds out over the valley. East Tennessee Valley. And Bella, she's just happy to be around.